looking at Coal India. Remember, the stock has valuation comfort and the cash in the books is close to around 16% of the total market cap. The stock is holding mildly in the green because the numbers were a beat. What was so good about the numbers? Well, on the top line itself, they did meet estimates. And why was that? We already have the volume numbers with us. The blended realizations were relatively better, which is because the FSA realizations came in better and e-auction as a percentage of the mix was relatively higher. The margins, why did it do well? Because realizations were relatively better and the employee cost was actually lower on a year-on-year basis by around 11%, and that's a positive. However, the PAT number looked quite good because the other income was higher, and that's because of some interest cost that was a kind of one-off in the past quarter or so. But for Coal India, we normally look at it as the FSA and then the e-auction part of the business. So let's focus on the FSA part first. Volume, no growth out there. However, on the realization front, there was a bit of a perk up out there, which was a positive surprise. On the e-auction side of things, well, volumes as well more or less flattish with a bit of a negative bias. However, the realization, in fact, improved out there. And as a percentage of the mix, e-auction went up as a percentage of the mix to close to around 11%. That compares with around 10% on a quarter-to-quarter basis. Besides giving fairly okay numbers, it has valuation comfort with the cash in the books. They also declared a dividend of around 5 rupees, takes the total dividend payout for the year to around 26 rupees. And the receivables, which sometimes is a bit of a pain point, that's come down on a year-on-year basis as well. So put everything together, the stock mildly higher because these numbers were better than what the sheet was working with.
All right, that's about Coal India.